Jim Rogers. He's still with us over in our Asian headquarters, chairman, of course, of Rogers Holdings and the author of the book A Gift to My Children. Jim, let's talk about the gold price then. We've been above $1,000 for a little while now, for the back end of 2009 and into 2010. What are your thoughts on gold right now?
Well, I certainly own gold, but remember last year was an extremely strong year for gold. In fact, the last couple of years have been. Anything that goes up that far, that fast, should consolidate and rest, so I find the action in gold quite understandable. Maybe it'll go down, maybe it'll go up, I don't know. If it goes down, my hope is that I'm smart enough to buy more.
Well, yes, and if we continue to see strength in the dollar, if we continue to see, perhaps you could call it an ugly contest in the currency markets, and the dollar comes out looking the prettiest, if we continue to see that happen, how are you positioning yourself in gold for that to take place?
I would hardly call it the prettiest, Anna. I would call it maybe the less ugly, if you want to call it anything, because there are very few paper currencies around these days that aren't suspect, and they're getting more and more suspect. There may come a time when we all have to have all of our money in real assets, whether that's silver or wheat or zinc or natural gas, I don't know. But all governments around the world are debasing their currencies, so it's a question of which one is the least attractive. Right now, none of them are terribly attractive on a fundamental basis.
Then in the commodity space, which sector would you say looks most attractive to you?
Well, I like to buy the things that are cheap. Silver's cheaper than gold on a historic basis. Natural gas is cheaper than oil on a historic basis. I look at the things that are cheap, and sometimes I find a good thing to buy.
We've been seeing a pretty big pickup in M&A, especially when it comes to, for instance, natural gas that you talked about, and also coal seam gas, for instance, an unconventional way of sourcing energy. But is that sort of going to be the next big thing, and that's going to take some steam off of oil prices? Really unable to break much further past $80 per barrel.
Well, one thing about oil right now that worries me is that they're huge. If you go, the CFTC in America publishes the speculative positions, and they're gigantic speculative long positions in oil right now, just like with currencies. Whenever that happens, it usually leads to a consolidation. Now, oil probably should consolidate. It went from 30 to 80 in almost a straight line. Things that happen like that normally have a correction. It would be good for oil if it did. I'm not a market timer, and I'm a horrible short-term trader, but I'm just saying to you, you see huge speculative long positions, you see something that went straight up, maybe it'd be good for oil and for all of us if it consolidated for a while.
So what's the fundamental argument for buying some of these commodities then, Jim? I mean, if you look at the gold price, which I know, and you are an owner of gold, I mean, we've seen such acceleration in these prices already. We have such speculative trades in them. We have ETFs, it seems, expanding almost exponentially, the level of trading in ETFs in gold. How can you get involved in this particular commodity safely?
Well, and I don't know anything safely in the investment world. I've never used that word in the investment world in my life, because there's no such thing as, quote, safely. Everything has a risk. People who put their money in Iceland 2 or 3 years ago and had it in the bank thought they had a safe investment. Well, lo and behold, the currency collapsed. So you know the rest of that story. You said it very, very well. We see more and more speculation in gold and oil and things these days. Whenever that happens, it's usually time to step back and let other people speculate and wait for things to cool off a bit. That's what I'm doing. I have no idea if I'm right or not, but that's the way I'm acting right now.
Other bubbles? Do you see any other bubbles around the world, Jim, right now? You've talked in the past about Treasurys. What are your thoughts on that one now?
Well, there's no question that the United States government long bond is a bubble, if you ask me. And, of course, Chinese real estate, urban coastal real estate in China, in my view, is a bubble. But the Chinese government, as we discussed before, is trying to cool things off, and let's hope that they pull it off. Hong Kong real estate is nuts, if you ask me. Several Asian countries are nuts right now. But other than those two things, I don't see too much that's in a bubble right now.
What do you make of this trend that we're seeing, iron ore prices moving towards spot pricing instead of the contract prices that we used to see? Is that going to create more inflated price structures in the...
Well, it'll certainly create a better market, because the idea that you meet once a year and you sit down and decide what the price is going to be for the rest of the year is a little bit crazy if you ask me. It would be much better if they did have a freely traded market so that people's emotions, people's fundamentals, everything can affect the market, and then smart people will buy at the right time and sell at the right time.
And quick thoughts about this Rio Tinto 4 trial, a verdict expected next Monday?
I have no idea what's going on there. The whole thing seems very peculiar to me. I'll leave it to somebody smarter than me to figure out that situation out.
Thank you so much for your time and thoughts today. We're delighted to have you as always. Jim Rogers, chairman of Rogers Holdings, shedding light everything from China to bank lending, the Eurozone, and also commodities as well.